What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley is the CEO of Akerna, the best trade idea resource out there.
What is up, Zinger Nation? Happy Friday. We've made it to the end of another trading week. We have a packed show today, as always. Joining us right at the beginning is going to be Ben from StoryTrading. He's been on the show a few times. Some of you may remember he pitched us AEHR a few weeks ago. The stock has been up about 20% since he pitched it. So great pick from Ben. We're going to bring him in again for another stock pick. So excited to get that from him. But real quick, before we get started, let me know in the chat what y'all have been watching today, what stocks you guys have been trading. Mixed bag today as far as different stocks. Let's check it on the SPY real quick, because this is the best way to just get an idea of how the market is moving. We're up almost a full % now. And of course, we've got Jerome Powell speaking later this afternoon. So a lot of people are interested in to see how the Fed is going to, if they're going to continue to talk about tapering or if they're going to try to ease those fears of tapering the rates. But without further ado, once I get the universal sign from Ben that he's ready, maybe a little thumbs up, we're going to go ahead and bring Ben on. We're going to get his new stock pick. It's a surprise. I don't even know it. So I'm excited to hear from Ben what it is, and I'll definitely be adding this to my watch list after, again, he pitched AEHR and then SMSI. So without further ado, let's go ahead and bring Ben on.
What's up, producer AB?
Ben, how we doing today? Happy Friday.
Happy Friday to you. A lot of action this week, a lot going on. I do have that new stock we teased was the digital health stock, but first we got an update on Air. And we also have an update on Virtra, VTSI. I did present that a little bit a couple of weeks ago. I don't know if you remember. I think it was on August 18th. Presented Virtra Systems, VTSI. So I have two important updates. We'll go through it real quick, and then we will get to the new pick. Okay, so we talked about a digital health pick. This pick I've been in since $7. It peaked at 32, and now it's $12.50. I'm not going to reveal their name right now because I don't want people jumping and buying it right away. Want them to hear about the story first. Don't want people to get hurt, right? You shouldn't just jump and buy it. Hear the story, and then so I'll give you all the facts, and then you can decide. So this has been a high conviction pick for me. I've been very interested in the digital health space since COVID hit. Teladoc was the first stock I bought right when COVID hit at like $100 back in February of 2020. So this is the bellwether in this space. The stock I'm going to present today is impacted by how Teladoc does. A little bit about the story behind the Teladoc chart. They bought a company named Livongo, which I'm going to show next. And due to concerns with Livongo integration, the stock has kind of tailed off. So this impacts all the other digital health stocks. Now, let me talk about Livongo for a second. Teladoc bought Livongo a few months after the pandemic for 38 times sales. And you can see the chart there, right? So this stock that I'm presenting is in the same sector as Livongo, very similar business model. And let's look at the valuation. So the Livongo buyout, August 5th, 2020, Teladoc bought them. He's at 38 times sales. Teladoc at the time was 19 times sales, so twice the valuation of Teladoc. At the time, Livongo was growing at 125%. And now this stock is forecast to grow 100% in 2022 over 2021. So similar growth profiles. And if you look, here is the growth of the revenue, quarterly growth of this company. So they're really booming. This is a combination of acquisitions and organic growth, which is going pretty well over there at the company. Now, one of the biggest reasons I bought this company at $7 was because they did incredible capital raise. Now, ignore this little, this is a data error up here, this sharp bump over here. There's been like, I think 3 capital raises in the last 18 months, but this company has been incredible with them. The first one at around $7 was above market pricing. And at the time it was like a 25 million market cap and there were no warrants. And it was a huge offering, like the same size of their market cap. So right there, I knew something's going on. There's big money behind this, and they're getting institutional support. They don't have to give a discount. They don't have to give warrants. And that trend continues throughout the year. They've been raising big money, doing a couple acquisitions, and every single time the offerings are either at or above market with no warrants. And that's an incredible feat for microcap management to pull off. And it's really, really telling about what institutional investors think about this company. Looking at the valuations, you can see the EV to revenue for this company was close to 50, and it's crashed down to 9. There may be a buying opportunity here. We're going to go into the chart in a second and talk about what's going on. So look at these valuations of the peers. Teladoc right now, after the pullback, this is based on 2020 consensus estimates. I had to calculate it myself. You're not going to see pull this up easily. So Teladoc at 8.6 times sales. On track, another name in the space, 3.84 times sales. This company, 2.81 times sales. So it's the cheapest of the whole bunch. And Livongo, remember, was bought out for twice the multiple of Teladoc. If this company gets that, that's a 16 multiple. You're talking about like a 5-time return from here. So ready for the big reveal?
Yes, sir.
All right. So this stock is ticker symbol DRIO, Dario Health. Last trade, well, now it's 12.85. I did want to present it earlier this week when it was 11.30. So it's already on the move this week, and there's a reason why it's on the move. So what's the story behind the trade? You can see here, it's really, really pulled back sharply. This peak here, I think, is largely attributed to Teladoc, the bellwether, coming down and impacting all the stocks in the digital health space. But more acutely down here, you had like a 50% drop in Dario Health. And I need to pause here and talk a little bit about the company and what they do. So this company started in terms of in digital health monitoring for diabetes. It was a B2C company, meaning business to consumer. They sell devices through Walmart. You connect it to your app, you check your glucose levels, and it's a way to monitor your own chronic health conditions. Subsequent to that, they bought MSK company for musculoskeletal. Upright, it's called. It's a little device you put on your back to make sure your posture is good. After that, they bought Way Forward most recently for mental health, chronic management of mental health. Now, what they're doing, they're dramatically changing their business model to go from B2C, business to consumer, to B2B2C, which is business to consumer, which means they're now selling this product to doctors directly, to employers, and they're trying to get into insurance companies. They've had a lot of traction with employers. And the big one, the insurance company, is the story here. So they've been teasing that they would have this big insurer coming on board, which is going to be a path to 100% growth, 2022 over 2021. It's been about 4 quarters, and it's been delayed. And in the most recent quarter, well, Q1, they basically made a promise. They said, we will sign this insurer by the end of Q2, which is June 30th. And it didn't happen. And right at June 30th, the stock went down like 50% because they lost a little bit of credibility. What happened? Where's this employer? Now, here's the opportunity. The opportunity is, there we go, down 50%. So, but why now? Why will it inflect? Well, if you were on the conference call on Q2 earnings, first of all, Q2 earnings was 5.3 million, beating estimates of 5.1 million. But it's all about the insurer. They gave, for the first time, a lot of transparency of what's going on with this insurer, which made me feel really comfortable that it's still happening. Take note of the underlined passages here. We acknowledge this deal is taking longer than planned. The terms of the deal are agreed to. We did have some unforeseen logistical delays unrelated to any deal points, but we believe the signing is now imminent. Customer has stated that they desire to launch this year. Keep going over here. The health plan implemented a new IT policy. This is great transparency, which gives a lot of confidence. Because they had brought in a new head of their basically chief information officer, and we got caught in the process. So we believe that we are through those processes. The terms of the agreement have not changed in months, and we do believe at this point that signing of that contract is imminent. Now, just going back to the valuations, I'm going to scroll real back over here, right? The reason this EV to sales ratio dropped is because people think it's not coming, all right? But I believe it is coming. And when it does, for this to get back to the relative valuation compared with Teladoc, it's got to go to $20. This has been consistently trading at a certain valuation multiple compared to Teladoc, and it just lost that association here in the last 30 days because they didn't come through with that deal. As soon as it comes through, I think this is a $20 stock. So The last thing I want to mention is OnTrack has completely imploded, down 90%. Now, OnTrack's important because Dario has poached a lot of key people from OnTrack to help sell their plans to insurance companies. I contacted the CEO of Dario. I said, what's going on with OnTrack? Is this an opportunity or a headwind? And he said, really neither. It's not an opportunity or a headwind. He said, what happened is OnTrack lost a couple of their insurers. He said, I can guess maybe they lost their insurers because we poached their top sales guys over to us. But he made a point to say OnTrack is about physical coaching with real coaches. It's not about a digital coaching, a totally different sector. They're not competing with each other. So he does not see this as either an opportunity or a headwind for the people who may have been concerned with OnTrack. And here are the technicals from my favorite technical analyst, Rexman74 on Twitter. You can see his lines and his charts over there. So that's the story. And right now, I just want to point out the stock is at 20 DMA resistance. So interesting to see what's going to happen in the coming days. And hopefully this deal gets announced.
Yeah, no, definitely. I mean, I'm excited to kind of watch this one. I know you teased it last time you were on the show, so it's good to get the full story and the full pitch. Apologies that we didn't get you on sooner when the stock was at more that 1130 level before we got this little move up. But Ben, unfortunately, we do have a packed show today, but kind of along the same lines, we have a couple biotech experts coming on to talk some biotech stocks. So we got the Tela Health stock pick in DRIO. And then now we're going to move into some more biotech stocks.
Sounds great. Thank you.
Right. Well, thank you for hopping on. We're going to be adding this to our Power Hour watch list. Again, in the chat, let us know what you think about ticker DRIO. We will get you back on to get some more updates on the stock.
Sounds great. Have a great day.
You too, Ben.